I'm just gonna play some royalty-free music in the meantime, and then we can start at 4 p.m. That's in about 5 minutes. Brian, let me know when you've shared the link on all of our socials. And we can. Okay. Okay, I'll wait for you to share it on our other socials, and we can slowly get the ball rolling. Sure. Hey Gary, can you also pay attention to the Twitter stream this time around, please? Just so we can make sure that everything's being um, everything's being heard, because I'm not sure if the OBS is set up correctly. It should be, but I'm not 100% sure. It should be on our Twitter channel. Cool. Can you or can you not hear Brian? Yeah, I can now see that the desktop audio is for some reason not recording on my OBS. All right, let me see what that's about. Um, oh, well, it might be having something to do with my desktop audio says device not connected. All right, let's fix that real quick. All right, how about now? Gary, can you say something?
Testing sound.
Should be good to go. Thanks for letting me know. Brian, do you want to really quickly share your screen so that I can make sure that everything in your OBS is looking good from an audio perspective?
Yep. Let me know if you can see everything okay.
Yep. Let's see where your OBS is. Are you sharing your OBS, Brian? Because I can't see it.
Yeah, I'm sharing everything.
Don't see your OBS.
When you say my OBS, are you talking about the actual window?
The program, yeah.
Full screen, I see what you're saying. I can do that.
Yeah.
Full screen, sharing. So main window, you should be able to see OBS here in the bottom left.
Yeah, so let's see. You have one audio track, and what does it say there? I can't see it. Does it say desktop audio?
Yes.
Okay, let's see. Testing, testing. 1, 2, 3. Yeah, so it doesn't seem to be picking up on my voice. Gary, can you say something?
Testing stream sound.
Okay. It seems to be picking on Gary's voice, though.
Aha.
Gary, try say something again.
BTC breaks key support. Also can't hear anything from the Twitter stream from Periscope.
You can't hear anything?
Yes.
Okay. Brian, can you go into settings on your OBS and go to audio? First one is default. Okay, try yeah, click on the default one. Yeah, the first one. Yeah, try whatever headphones you're using.
Test 1, 2, 3, Gary. Any luck?
There is a delay. Expecting some delay. No sounds yet.
So I can see myself now in. Oh, one more thing. Yeah, I see what the problem is. So it says mic auxiliary audio disabled. The third one. You see it?
Yep.
So that one, let me tell you what you should do. Just use default instead, or whatever you have, headphones, whatever mic you're using, whether it's a headphone mic or whatever. Okay, so now
Got it.
let's try that. Click apply. Okay. Okay.
Test 1, 2, 3,
There
Gary.
we go. That's the stuff. Should be good now.
All right.
Okay, waiting.
All right. Sorry for the troubleshooting, guys. This is the first time we're trying to do a Twitter stream at the same time. So hope you'll be patient with us.
Reloading the Periscope page. Yeah, looking good.
Yeah. We're good. Okay. Let me start recording the stream on my end.
Should I only share my window now? Is that okay?
Yeah. Totally fine. Okay, I'm recording. Everything seems to be picking up on my OBS. Gary, say something?
This week in crypto.
We're good. Okay. All right. Hello, everyone. Just joining us. Welcome to another edition of This Week in Crypto. If this is your first time here, especially those of you watching this for the first time on Twitter, this is a weekly panel community call where the Santiment team and sometimes community members gather around and discuss recent crypto market events. We do this from a lens of fundamental data. What we are going to try to do over the next 30 to 45 minutes is break down a bunch of interesting market insights that we've discovered over the last week using our own metrics and indicators. So if you haven't used Santiment before, I strongly suggest checking out app.santiment.net. The link is going to be in the description of this video on YouTube, and there's a link to it in the description of our Twitter account as well. So over the last 3 years, we've developed dozens of tools and metrics, custom indicators, and template, all with the purpose of trying to help you understand the behavior of major market stakeholders. So instead of relying on financial data and price-related insights, what we focus on is on-chain, social media, and development activity of over 900 different cryptocurrencies. So you can find all of this information directly on our website. And if you don't want to wait until next week to hear our opinion or talk to us about the crypto market, I also suggest checking out our Discord channel. The link is going to be in the description of this video as well, because we talk about this sort of stuff pretty much on a daily basis. So throughout this call, we are going to be discussing a variety of Bitcoin and Ethereum related fundamentals that we have kind of found interesting over the past couple of days. And then at the end of the stream, sometime probably around 30 minutes to 40 minutes from now, we are also going to be taking audience questions. So anyone from Twitter or YouTube that is interested in, a particular coin or asking us something about, recent market events, whether we think a particular coin has a chance for a bounce back or it's maybe kind of fizzling out at the moment, just let us know in the comments and we'll get to audience Q&A at the end and do some impromptu analysis using our metrics and indicators. All right. Introductions being out of the way, we are going to start once again, as we start every stream, with Brian sharing a couple of his findings using some of the templates that have been developed with a SAM-based Pro subscription. So Brian, if you're already sharing your screen, let me just zoom you in on my end and you should be good to go.
Appreciate it, Dino. What's going on, everyone? So What I'm showing here are the top 100 blockchain returns over the last 72 hours. As you guys can see, it's been another great 3-day stretch, just as it was when we presented last Friday, particularly for Ethereum, which you can see here as the #2 coin. And then obviously the lower caps and the mid caps especially have had really good stretches since Tuesday. The average has been about 12%, while the median, which excludes outliers, has been at 4.7%, and 90% of the top 100 are in the green. So it's been a great time for crypto investors everywhere. You will see that the returns for almost every coin that we track on the MVRV side are in the positives for the last 30 days, and most are even in the positive for the last year. You may think this is a good thing, but it's actually a bit of a cautionary flag that these types of charts are correlating with investor returns being exclusively positive right now. And I'll get into that a little bit later. Secondarily, we look at the 30-day chart, which looks even better. 95% of the coins over the last month are in the green. And lastly, in the 90-day chart, only 3 are in the red, 97% are in the green. So obviously a very good sign for the crypto markets. But like I said, there are some cautionary flags that you have to think about when things are looking quite this good, especially when investor returns are involved. And going over to the combined, you can see here in yellow is the 90-day, green is the 30-day, blue is the 3-day. Almost all of them have their highest over the last 90 days compared to 30 or 3, meaning that I guess I should say June and July, and even going back to mid-May, were the primary months of a lot of these returns from the biggest returns, I should say, from those 90-day spans. So moving on to sentiment. I'm starting with Bitcoin, even though we're going to get into the meat of our presentation, which is going to be about Ethereum, with so many big headlines being made over the last day or two. But first off, for Bitcoin on Twitter, we're looking at the sentiment, which we track over time, which separates the positive from the negative here. And I wanted to take a look at what Bitcoin has done as of late. This is just over the last week or so. We peaked about 4 days ago on Monday with a positive score of 558, and it's actually declined once it kind of hit that 11.9 mark and came up just short of 12K. And the positive score has sort of declined while negative is mostly staying flat. And when we go down here, which many of you are familiar with, the weighted social sentiment metric, we can see that the sentiment balance multiplied by the unique social volume, which we saw up here, is showing that we are getting a decline in the positivity that we've been seeing at pretty high levels, well over a standard deviation of 1 at the end of July and early August. It's now at a modest 0.76, which obviously is still a sign that there's a slight amount of elation going on for Bitcoin, with the price understandably being high. That's going to correlate fairly often, but we're looking for a break below 0 at some point for buy opportunities. Obviously, the price can continue to run up, and we could see 14K or 15K at some point. But with this in mind, it appears that Twitter, which is notoriously good at price prediction, doing the basically the opposite of what the crowd is doing, we're seeing that we're still at a high level right now for sentiment, which is something to keep in mind if you are looking to take profit. These are generally the levels where you want to do so. Again, this was kind of the exception. But right here, for example, we can see that when we topped, I believe this was, at about 9K, and then we kind of declined for a while. This ended up being the buy opportunity here when we were in the low. So when you're high up here, profit taking is the way to go. When you're low, this generally is the best buying opportunities. Obviously, this is an imperfect metric, and it's not going to be a perfect correlation, but just something to keep in mind in tandem with the other metrics that we're going to be going over. Moving over to some other metrics. I'm going to start with daily active addresses, just look at the sort of dark orange here. You're normally going to see it in more of a brighter orange. I've made it dark just so that we can see the other metrics clearly. But looking at the dark orange, obviously a clear rise has happened over the last 6 months. Recently, though, you'll see that there's been a bit of a stagnation here. We did have I think it was close to like a 2-year high on August 5th of 1.13 million daily active addresses, and it's kind of declined a little bit slightly. And you'll notice that even though the bars are just a smidge higher than where they were when we were in the 9K range, it isn't as significant of a rise as we're hoping. And when we're not getting enough of a rise, you guys may be familiar with the daily active address divergence model. And what we can see here, let me see if I can scroll over just a tiny bit. I'll make it a little smaller, 115. I'll even go 110. Not quite straight. Actually, yeah, that's the last bar. Go 105. There we go. So as the price has risen, going back to this, daily active addresses aren't quite rising at the level that it was here when we were getting a healthy amount of active addresses improving as the price was after Black Thursday. So now we're actually seeing a lot of red going on because of the fact that the deviation from the mean is moving a lot higher for price than it is for daily active addresses. So the average amount of DAA is basically lower than the expected price that we're seeing now. And that's what's causing these red bars. And over time, if you guys really look at this, red has indicated falls pretty accurately. Green has indicated the rises pretty accurately. Our Sandbase Pro members who have access to this have been using it to their advantage. We obviously have it for many, many different coins that you guys can check out. But for the purposes of this call, we're just going to be looking at Bitcoin and Ethereum in just a moment. So keep in mind that we are a little low with DAA at the moment. And we're going to need to see a little more of a rise to justify staying at this 11 to 12K level and possibly go higher. Now we can go higher without daily active addresses go higher. But if that happens, we're just going to see more and more bright red like this, or like this when it was really, really low in mid-February, and it sort of signified that we were about to see a drop. Going back here, before I go into social volume, I'm going to show you guys MVRV. And for those unfamiliar, MVRV is a measurement of what the average returns are of traders who bought over an X period of time. In this case, we're looking at the 30-day MVRV. And currently, you'll notice we're at 1.07. If you look over here when I'm highlighting the most recent date, we're at about 1.06, 1.07. And that's indicating that we are around 6 or 7% above water for the average trader. Now, normally over time, this metric is going to hover right around 0, just as it does for all assets, because in trading, there's going to be a kind of a zero-sum game that always tends to formulate with enough time stretching out. So right now, we're slightly over water. And obviously, when we're underwater, if I can highlight it here, if you look at Black Thursday, when it got really low there in mid-March, that was the buy opportunity. And people were down at around negative 39% on this 30-day MVRV chart. That's the time to buy, right? And we'll rarely see something quite that low because these, pandemic-related dumps don't happen too often, obviously. But if you see something, under negative 10 or something, that tends to be a pretty great buy opportunity in most cases because you're buying against other people's losses, and that's when a lot of FUD tends to happen. So keep this metric in mind, and I'm also going to show off the MVRV Sandsheets template briefly in a moment. Before we do that, we're going to look at social volume here, and you'll notice that obviously the highest social volume peak over the last month or so happened in late July when we finally shot from that 9K range straight up to 11K. And that's when we had a slight local top, the price dipped, and then it was able to rise again after interest died down and we started seeing low social volume again. Now we hit another one here. And since that time, it's kind of fallen back into the mid-level as a lot of attention has been on Ethereum and Link over the past week or so. Some other projects that stand out, like YAM, took a lot of attention away from Bitcoin. And this isn't to say that Bitcoin is going to drop because attention is taken away from it. If anything, Bitcoin tends to do best when social volume is low. So right now, being in the mid-range, not much to say about it, but keep in mind, when we start getting really low levels like this or like this, that can be a sign that we may be rising in the near future. Now, moving back over to our DAA divergence template here, I'm going to show you Ethereum, which shows
Brian,
a much different picture.
Before we jump into Ethereum, it might be a good idea, yeah, because I think we've got a bunch of stuff that we want to talk about Ethereum related, but I know that, so the topic of, or the title of this stream, at least on YouTube, is that Bitcoin has broken a major key support, which I think we wanted to touch upon a little bit before moving on to Ethereum. And this is where I want to call on Max, our founder, because Max, I think you wanted to briefly touch upon this key support that you and I have been watching over the past couple of days. It has now finally broken, and what you think this might mean for, you know, both Bitcoin and altcoins in the next couple of weeks, even maybe next couple of months. So if you want to share a screen.
Yeah, just shortly. Then I will give it back to you.
Of course.
So let me see, it's here.
Yep.
Good. This chart should be known to people who, I see echo, I hear echo. Maybe someone mute.
Let me mute me. Maybe it's on my end.
Yeah, this chart we show, I think last month, constantly every week, just to rephrase or repeat what we are talking the story. So it's Bitcoin dominance. Yeah, going all the way 95 down to 34. Back at the top of last crypto madness. So since then, Bitcoin recovered, and we've been in the process of Bitcoin losing its dominance as Ethereum including by pumping. Now, there was a quite strong support line, and mentioned a few times, 61 to 63, and we thought it will kind of stabilize on it. Strong because many times was tested, and in order to go in other way, up and down, you normally have to break it. And yeah, we seem, and you see the last few weeks it was trying to go slightly below and above, slightly below and above. Now looks like we've broken. So what does it mean? It means that for the weeks to come, unless Bitcoin dominance find the next support, which is somewhere around 56, it's basically for us, this is a choice. Okay, where do we put our eggs? Is it Ethereum, which has many reasons to go, or one of dozens of other alts? And this choice have to be made wisely. Yeah. I would personally go for two strategies when we rebalance the portfolio. Two main things. One, if you want to go into token, any token, yeah, then one is to go into any token, and second, the most important strategy, we need to start looking for exit points. We're in territory where altcoins, Ethereum included, you should prepare to exit now. Yeah, and prepare yourself nicely. And there are criteria how you do it. So, but starting from the first one, how, if you want to play the ground, where do you play? The most reliable indicator so far in crypto, if there is criticism, doubts, or negative towards something. It was the case with Ethereum last week or so, where you saw some tweets and messages, and it's so expensive, let's move to this or that chain. And this is exactly in the background where Ethereum is growing. So as long as we have negativity for Ethereum, relatively safe there. Now we've seen it's the same for Chainlink when they were let's short it all together with lead by Zois. I hope the guys didn't commit anything but suicide because they should be destroyed completely in their short position. This kind of things, you also, if there is a big splashes, this is a scam, or this is a bad, it's not working, where in reality actually kind of working, so you can go along too. Or the second option, when you could consider, when there is seems to be working for the moment, upcoming listings on, of course, the best is Coinbase, or if some of them doing smaller coins listing on Uniswap or anything, seems to be working for now, or mainnet launch seems to be working for now, but be careful, once it become public knowledge or crowd knowledge or everyone is talking about it, will not work anymore. The environment where you could go long, yeah? And at the same time prepare to start closing positions or exiting all these alts, because once Bitcoin found the next support, based on what I see on this chart, it's around 56. The value will flow back to Bitcoin again. For sure, many alts are overvalued already. Yeah, no doubts, because this is how it happens. Once it starts pumping, it goes to one. Chainlink, one of them, because I saw the question, it's overvalued, no doubts about it. But yeah, the market stays irrational much longer that you can keep your short position. This is my requiem for those capital. We'll eventually, I think we'll eventually see 10 or 11 for Chainlink again, but God knows when exactly. Good. So this is my short summary, where I say, if you go long, do it smart, have specific reason to go long or be in the coin, but prepare for exiting position when you see, in general, too big social volume, too many talks, like no doubts at all. Once you see for Chainlink that everyone's say, okay, actually, it's working correctly, it's the best, they will win all the market. So this is a clear sign. Leave it right away if you have link. If you see this message is spreading around. Yeah, I'm leaving a microphone on this stage to Dino. Dino, take it over.
Thanks, Max. All right, thanks, Max.
Yep.
So yeah, that's essentially, guys, one of the things that we wanted to touch upon, and I think it dovetails very nicely into Max, if you want to stop presenting, and Brian, if you want to take over the screen again, it dovetails pretty nicely into our next topic, which is, in fact, the second biggest coin in the crypto market, Ethereum, which is currently up 10.17% on the day. Now compare that to Bitcoin, which is treading water over the last 24 hours. It's just 0.14% up, or pretty much breaking even on the day, trading sideways, while Ethereum is having its moment in the sun. So Brian, I know you prepared a few templates, and I'll also share some of the additional metrics of ours about Ethereum that we wanted to cover. What are you seeing on the charts as far as Ethereum's fundamentals are concerned in the past couple of days, and especially given this move about 425?
Yeah, good question. So obviously, relating to what Maxim just said about the sentiment and how you're getting a little echo, by the way, Dino, if you don't mind muting.
Mm-hmm.
Test 1, 2, 3. Okay, I think we're good now. So relating to the social sentiment, we actually hit an all-time high in weighted social sentiment for Ethereum. So there was a massive amount of talk about it when it hit that 400 mark about a week ago, a little over, and then it actually stayed there until it started to get a little bit stagnant. And as soon as it dropped, that is when the price actually rose. It was dropping back to about 390 in price, and it rose all the way to 430 as sentiment started to drop. Now we're still. Someone, by the way, is on.
It's Max, I think.
On mic, and
Max,
they could probably mute.
Yeah, if you want to mute your mic, we can hear you typing, and
hopefully they can hear me.
Yeah.
Anyway, so we're basically at a level right now where we're still extremely positive for Ethereum, especially on Twitter. And until that happens, it's kind of a slightly bearish signal that we're going to be dropping down a little bit, just because these are such high levels at 2 or about just under 2, where we are now, above the standard deviation of what the normal resting state is for the sentiment for Ethereum. So very interesting there. Moving on to the daily active addresses, which this is what I think is one of the most important we have, because price and daily active addresses correlate fairly closely, not perfectly, but fairly closely. And we are at historically low levels of daily active addresses being produced compared to the price. We actually just had a 67-day low just 2 days ago in daily active addresses, but the price really didn't care, and it was up at about 400 at the time. And it actually, even though the following days weren't quite as low, they're still on the lower side. And the price basically said, we don't care, we're going to keep going up to about 430. And I can visualize that here on our daily active address chart for Ethereum. And you can see we were at about 395, 396, getting a some all-time high, not all-time high, but 2-year high levels for daily active addresses. And as it stayed flat, the DAA dropped off, and this is that 2-month low that I was talking about. And even yesterday, it only jumped up a little, but we've had 5 straight days of fairly low DAA compared to the price levels, because these DAA levels are about where they were when we were still at about 240, 250. And as it was rising to 300, that's when DAA started to go up. And these were actually higher than where we were just 5 days ago. And ever since, we've stayed pretty low despite price being high. So this is a major concern to me, because our model is supporting that. These 5 days resemble the 5 I just looked at, and they're all in the bottom 10% most bearish signals we've had in the history of Ethereum's chart here, which covers about the last 4 years. So it's a pretty significant amount of data. So long story short, we are not getting the DAA to justify where we are in the price. It doesn't mean that we can't go a little bit higher, or alternatively, we could have DAA just start to catch up due to FOMO and due to crowds wanting to get in. And that can even things out before we ever end up dropping. But all things considered, if you're playing the odds here, there is more likely to be a drop now than there would be normally, because generally when there's red here, especially neon red, that's when we drop. So keep that in mind. And definitely, if you're a Sandbase Pro member, make sure you have access to this and send us a DM, or just type in the general chat on Discord, or even just on Twitter. Send us a message that way. We'll make sure to hook you guys up. Moving on to NVT. So this is Ethereum's token circulation, which is the unique amount of tokens being moved in a given day, illustrated on a monthly basis, because this is more of a long-term indicator. We're actually getting a very healthy amount of tokens being circulated right now. So this is more of a bullish argument. I don't think it's as strong of an argument as what we just saw on the DAA side, but it is a counter if you believe in NVT strongly, which we do here at Santiment. We've had 4 straight months of bullish months here, with August being our latest. And in each of these, the bar has actually gone down. Down is good on this chart, because it's basically measuring a ratio between market cap and tokens circulated. So the lower, the better. And right now, we are, especially over the last couple of days, getting very, very low, low as in high token circulation, but low NVT numbers, which match what we haven't seen since basically the end of the bull run, December 2017 and January 2018. So keep that in mind, but just understand that this can sometimes be a little lagging, and the token circulation is because there are extra people jumping into Ethereum right now. But on the daily active address side, we're not getting enough unique addresses. This could just be a lot of unique tokens being moved, but within a smaller amount of addresses than one would normally expect. So very interesting there. And I have one other thing I wanted to share. I want to make sure to not go too long on time here. But this is the MVRV 30-day, not just for Bitcoin and Ethereum like we looked at, but for the majority of the ERC20s that are in the top 100, and even a few outside of the top 100. Right now, every single MVRV 30-day return is in the positives. These numbers can go negative, as you can see on the 1 year. There's some negatives here. But in the last 30 days, all of these on our model are in the positive right now for 30-day buyers. And you can see it illustrated here. The blue bars, while ignoring the reds here, which are 1 year, the blue bars are illustrating 30-day returns. And you see something like Raiden, 52% average return, which is just insane. Band, 49.5, Fetch, 46, Chainlink, 41.5. These are very large returns for 30-day MVRV metrics. So I definitely would tell you guys to be cautious here. With so many altcoins in the green, eventually there's going to be something that causes people to either falsely sell off because they get a bear trap, or the price will just fall and cause these returns to start going back to their resting states of zero. So this is a great illustration of what is happening with average returns. Okay, this is actually up, and obviously this looks like a big concoction of different colors, but it's actually super interesting. If you have access, you can highlight each of these lines and see how they compare to each other. If you just look at the latest column, you can see the exact same 30-day MVRV numbers that I just showed you on the other tab. And I think it's a really cool way to visualize how the 30-day MVRVs or the 1 year MVRVs fluctuate over time. So definitely request access for this or get a Sandbase Pro account if you'd like to check this out. And with that, I'm going to leave it to Dino because I know he has more to share on Ethereum. And if we have time, I can show a few things for YAM, but I don't want us to go too long here.
Thanks, Brian. Good stuff as always. Yeah, so guys, before I jump into a few additional metrics for Ethereum, just a reminder that after what I'm about to show you, we are going to be taking some audience questions. So any sort of coin or specific cryptocurrency or specific market event that you want us to look into a bit closely based on our data, we are going to be doing some impromptu analysis at the end of the stream. I'm already seeing a few questions in chat, but if you have some additional coins that you are interested in, just leave us a note and we'll try and get to it at the end. All right, so Brian already showed a few concerning signals for Ethereum, like this growing divergence between the amount of activity on the Ethereum network, as shown by the amount of daily active addresses, and its price, which as you can see over the last couple of days, there's been a growing divergence as the network activity has continued to decline, but the price has continued to rise, which usually, if it continues for a long time, like you've seen here in February 2020, can kind of lead to a consolidation into a price correction. Now, there's additionally, actually, let me not start with miners. Let me start with exchange data. There's some additional concerning signals for Ethereum once it jumped above 425 that I think should be addressed as well. So the one chart that I was looking at earlier before the call is the exchange inflow chart for Ethereum. Now you're looking at a yearly view, and obviously you can see the biggest sort of amount of Ethereum being moved to centralized exchanges, which is what this chart is representing. You can see the biggest move being made during the Black Thursday dump. However, let me actually, I think, yeah, I'm a bit zoomed out. Let me refresh this chart. So you can see that there's been a pretty strong uptick in the amount of Ethereum being moved to centralized exchanges in the past 24 hours. Now, presumably, this can indicate, especially when it correlates with a price rally like it does at the moment, this could indicate a potential sell-off opportunity for some people, basically long-term or short-term Ethereum holders looking to exit the market for the time being, because of the, because they don't believe that the Ethereum can grow any higher. Now, let me.
Hey, Dino?
Yeah, go ahead.
Sorry to interrupt really quick, but would you mind sharing on Hangouts as well? Just because I'm sharing our screen for Twitter.
Sure. Yeah. Good point.
Normally it doesn't matter, but since we're sharing.
Indeed. Good. Thanks for letting me know. Yeah, sorry guys on Twitter that have not seen what I was just showing. We're just still trying to work out the kinks of streaming to multiple platforms. All right, so the metric that I was talking about is the exchange inflow for Ethereum. So let me zoom out a bit so you can see the strength of this latest move. Yeah, there we go. So in the past couple of hours, basically the last 24 hours, we've seen a major uptick in the amount of Ethereum being moved to exchanges. I think there's been about 500,000 Ethereum just in the past 24 hours entering known exchange wallets. So over the past 2 or 3 months, this is by far the largest quantity of Ethereum being moved to exchanges, which is not an ideal sign if you want the price of Ethereum to kind of not have too many obstacles into its move to 430 and maybe even higher. So if we look at Ethereum's or the supply of Ethereum on exchanges, we can also see a strong sort of uptick over the past couple of hours. Essentially, the total supply of Ethereum on exchanges has grown from 16.5% of its total circulating supply to 16.34% of Ethereum's total circulating supply being located on exchange wallets. So in a word, there's quite a bit of additional speculative activity surrounding this latest move for Ethereum, meaning that some speculators are looking to potentially exit the market as the 425 price mark has been hit. I think daily active deposits maybe has not been calculated yet for the final day, but you can already see kind of some rise in the amount of actual deposit addresses, which are addresses used to funnel Ethereum to exchanges, which has also been on the rise in the past couple of days. So this is another concerning signal that I want you guys to keep in mind as we move into this latest part of Ethereum's rally. Now, another interesting pattern that I've been seeing recently is the movement of previously dormant Ethereum coins, which has also had a few spikes over the past couple of days and even weeks, but especially this move I think is particularly interesting. So what you're seeing here now is Ethereum's age consumed. For those unfamiliar with this metric, what it tries to do is it tries to visualize the movement of previously dormant coins, or the coins that have not moved, in this case Ethereum, coins that have not moved between addresses for a prolonged amount of time. So when you see spikes on the Ethereum's age consumed graph, essentially what it means is that a substantial amount of coins that have previously just stated their addresses, basically people were hodling, not really looking to not just move but sell their coins altogether. A substantial amount of those coins, idle coins, passive coins, have started moving again. And very often, both for Ethereum but also other altcoins and Bitcoin as well, spikes in age consumed essentially mean there might be a shift in the behavior of long-term holders and even sometimes ICO participants for a specific coin. And it's not really as a leading indicator. Age consumed is neither a clear-cut top or a clear-cut bottom indicator. What it is a volatility indicator. In a very simple term, spikes in age consumed very often correlate with times of increased price volatility for the coin. Like if I zoom out a bit, maybe we can see a few other spikes in Ethereum's age consumed and kind of how they correlated with the price action. So once again, you can see these massive spikes obviously here as just network participants and speculators started to capitulate around the Black Thursday dump. But you can also see big spikes here around Ethereum's bottom here. A spike here around Ethereum's top, spike here around Ethereum's local bottom here, spike here before Ethereum started consolidating and before a push upward. So very often you'll see these sort of events be notable for Ethereum's price action as well. So given the fact that they are currently developing or materializing as Ethereum is pushing upward, and given the fact that we're seeing a correlating spike in the amount of Ethereum being moved to exchanges, we might conclude that some long-term holders are looking to take profits, which is not ideal if we want to see Ethereum do better in the next couple of days. One other thing that I wanted to show, not the MDRV long short difference, but instead the mean dollar invested age. So this is a very similar metric to what I was just showing, basically age consumed. This one also tracks the movement of previously dormant coins, but normalized for their dollar values or for the acquisition cost of the coins that have previously not moved on the blockchain. Very simply put, the rising slope in the mean dollar invested age indicates periods of accumulation for the coin. Basically, network-wide, the age, these rising slopes mean that the age of coins has continued to grow. By age of coins, I mean the coins are on average not moving on the network. They're staying in their respective addresses, therefore they're becoming quote unquote older. Now, when we see these types of valleys or drop-offs in mean dollar invested age, essentially what it points to is that on the network-wide level, network participants have moved from periods of accumulation into periods of distribution and potentially capitulation. So if we look at, let me zoom in a bit more so you can see it a bit more clearly. If we look at previous sort of times that this mean dollar invested age slope has either flattened out or started declining, it usually tends to coincide with local price stops for the coin in question. So over the past couple of days, and especially after Ethereum broke 400, we've seen a growing sort of divergence between mean dollar invested age, which has continued to decline, and the price of Ethereum, which has continued to grow upwards, which could indicate, you know, on a network level that many coins that have previously been inactive are once again starting to move. And given historical trends, this could be a concerning signal. Let me show you the all-time chart for mean dollar invested age, so you can see these valleys kind of coinciding with even all-time highs as well. So something to keep in mind as we move into next week. One final metric that I want to show, as far as Ethereum is concerned, is the miners balance. So this, first of all, let me zoom in so you can see some trends here. Okay, let me zoom in a bit more. All right, perfect. Okay, so what we're seeing here is the cumulative balance of all Ethereum mining pools plotted against the price of Ethereum. So essentially, in the past 2 weeks, Ethereum miners have been starting to offload some of their bags at a pretty rapid clip. Now, usually when this happens, at least when it comes to short-term or local price stops or local price action, when these miner balances start dropping off, they do tend to correlate with local price stops and incoming corrections. So we can see it here in June of 2019. We can see a similar drop-off in miner balance around February 2020, right as Ethereum was kind of forming its top around 270. We can see another similar drop-off in miners balance, essentially meaning that miners might be looking to sell off some of their bags as Ethereum was hitting 250, which coincided with its prolonged consolidation period. And then over the past couple of days and weeks, we've seen another strong move downwards as far as miners balances are concerned, which could point to a lack of confidence among some Ethereum miners as far as its price action is concerned. Obviously, it could also point to just the need for miners to liquidate some of their resources, some of their holdings in order to, just fund their operations. But in general, if we're looking at local price action, usually these major drop-offs in miner balance can correlate with price stops and incoming corrections. However, I will note one other thing, and this is especially true if we're looking at the all-time high for Ethereum reached in 2018. So when we're talking about sort of bull cycle highs and bull cycles in general, these, there has been precedent to say that, miners can dump a majority of their bags, even though the Ethereum price can, sustain that sort of sell pressure. So Max, I think you quite often point to this sort of pattern here as a sort of wall of worry, right? Where miners were in 2017 not really believing the hype and were looking to offload some of their bags, thinking that this in fact is the top, right? And then as they started kind of becoming more and more confident about the price action of Ethereum, and as they started accumulating once again, we saw it's really starting to break out to its all-time high. So if we're really in a bull cycle, like some people seem to think that we are, this sort of move downwards as far as miners are concerned might not be the nail in the coffin for its short-term price action, right? It could just be a...
Wait. For short price action, yes, but not for the final top. On the final top, they will start dumping. Everyone will stop dumping on the final pole. Everyone will believe that,
right.
Okay, that's it. This is now the new paradigm shift, or whatever you call it, the new money for the world. No one will be selling, almost no one. That's why it's growing so much.
Yep.
So you will not see decline in this. you will probably see very low before it mean age, whatever we discuss. But it's kind of mid to long term indicators. We just every week when we talk about it and we keep repeating it, the moment we come to the bull market, which will 3 to 4 key indicators which will help you keep rationality in totally irrational market, which will help you to exit if even you will not like to. And I know from 2017 it was very hard to exit the market, super hard. And we didn't have this indicator at the time, so I had to make decisions whatever knowledge I had. Now, when we had it, it will be easier for us to see, okay, even everyone believes this is the next super big thing, I have to go.
Right.
Yeah. So it's long term. Short term, yeah, if they're dumping, yeah, could be, because it's even though not a big amount, but they're not the only ones. Like everyone, you saw mean coin age. It means like people are moving to exchanges now.
Yes.
So it will probably will stop now right here, 4040, and we will be like again raging for some time.
Yeah. Thanks, Max. Yeah. So I tend to agree that short term minor balance like these types of the drop-offs, I don't even need to say that I believe so. You can just look at the chart and see how they correlate with the price action over time. Long term though, it's definitely not a nail in the coffin for Bitcoin, so for Ethereum sort of bull cycle rally. It could grow much higher, but I do tend to suspect that we are going to hit some consolidation before we go higher. Okay, that's as far as miners balances are concerned. Now, I did see a question in chat asking, I think it was Wasim. He asked if there is a dominance chart for Ethereum compared to Bitcoin. And Max, I think you answered to him already that you're not familiar with that chart at the moment. However, we do have
we found.
Okay.
We found it. Gary gave me, so I shared it in the chat. Yeah.
But I did also want to show what we do have as far as comparing Ethereum and Bitcoin, and this is a chart that we recently developed. I think we showed it last time as well, but I also want to just reiterate for people that are kind of pouring in maybe on Twitter and have not seen this chart before. So we are also interested in comparing Bitcoin and Ethereum over time, especially when it comes to its on-chain data and on-chain activity. So one of the charts or dashboards that we have recently introduced to our platform is the ability to compare the on-chain transaction volume, but in USD values, obviously, between Bitcoin and Ethereum, really between any two assets, but in particular, what we were interested in is looking at the trends, on-chain transaction trends between Bitcoin and Ethereum. So what you are looking at now is, first of all, here, let's look at the green bar first. So here we're looking at Bitcoin's on-chain transaction volume over the last 6 months. Actually, let me zoom out just a bit and look at the year-to-date data. So since January 1st, 2020. Okay, so as you can see, especially over the past 4 or 5 months, Bitcoin's on-chain transaction volume, or the amount of coins that are being moved daily on the Bitcoin blockchain, or the amount of value, if you will, being transacted on the Bitcoin blockchain, has kind of started to stagnate. On the other hand, when we look at Ethereum's on-chain transaction volume, it's quite of a different story, right? Especially in the past 2 months, the actual amount of coins being transacted on Ethereum has blossomed, I think, to one of its highest levels ever. Now, this is obviously not entirely, I think there is some noise in this data because Ethereum, in several lending protocols, I think this could be, this spike in on-chain transaction volume could be due to, people borrowing Ethereum and then lending the same Ethereum to certain lending platforms, therefore inflating its on-chain transaction volume. But even with that included, or even with that sort of practices or use cases being priced in, it's still an incredible spike in the amount of value being transacted on the Ethereum network. Now, finally, this is the chart that I like looking at the most, which actually shows the comparison between Bitcoin's transaction volume on the one hand and Ethereum's on the other. Now, as you can see, at its peak on January 9th, Bitcoin's on-chain transaction volume was 32.8 times higher than Ethereum's. Now, what that means in actual numbers is, let's see, so that was on January 9th. So Bitcoin's transaction volume was $7.5 billion, whereas Ethereum's on-chain transaction volume at the time was just a measly $229.4 million. Now, that was in January. Today, the difference between these two protocols in terms of the actual amount of value being transacted on them has dropped to just 2.5 times. So essentially today, Bitcoin, the amount of Bitcoin being transacted on the network compared to the amount of Ethereum being transacted on the network in terms of their USD values is just 2.5 times higher, which is a yearly low. So it does make sense to a certain point that we would see this sort of breakout in Ethereum's price. Obviously, I think this is even before Ethereum's latest uptrend here, which I think we can show you. 1 sec. Yeah, so even here, I think if we were looking at this chart, you could say, okay, there's definitely a shift in crowd interest between the top caps. And if I was looking at this chart and I was thinking of whether, going into Bitcoin and Ethereum, especially given the DeFi proliferation of the DeFi space, I would definitely consider, Ethereum to be a more appetizing asset. So now I think this sort of difference in trends is finally starting to be priced in a little bit. So even though maybe the market cap dominance between Ethereum and Bitcoin we don't have on our site, there are these types of metrics that I find super interesting that I wanted to share as well. Okay, so with that being out of the way, let's look at a few questions before we end the stream. So I've seen somebody asking about Balancer on Twitter, on YouTube, and there was someone asking about a quick analysis on Chainlink and QNT, right? I think so. So, right, Max, I think as far as BAL is concerned, we just started really tracking their on-chain data. So I'm not really sure how many insights we can really deduce from their month-long life cycle.
We can try basic, but sometimes very insightful. Yeah, general trend for directive addresses. This is distribution, the spikes. Then
Yep.
How many new addresses are added and transaction volumes. See if, but okay.
So we're seeing, these spikes in the amount of new addresses being created.
Yeah, actually, it's a good in this way. Then you see if it new addresses because of distribution of balance or because speculators are piling in. So sometimes there are more speculators. Okay, interesting.
Okay.
Yeah. You see, this last top was still pretty classic. Yeah, it was again divergence. So it was less and less activity.
Yeah, let's see its trading volume over time. Oh, okay. Well, now seems like the speculative interest is growing. Let's look at its on-chain analytics as far as maybe exchange inflow, although I'm sure that things like BAL are not necessarily only traded on centralized exchanges.
Well, most of them is not centralized.
Yeah.
At least as of now. When it's listed everywhere, then it will change.
Yeah, but we saw a spike in exchange inflow around its previous top. Today, although on the last couple of days, not really all that much sell pressure, at least in terms of what we're seeing on centralized exchanges. Okay, let's look at so this is all, I think, the sample size is too small to really be able to make any sort of educated guesses. But as far as its mean dollar invested age is concerned, so we're seeing the amount of basically the average age of BAL tokens here growing, meaning that people are not really moving their bags. Then it declined here, grew here, and then dumped right at the top. So essentially meaning that after basically 15 days of the average age of balancer tokens being growing on the network, meaning that on average balancer coins were not really exchanged between addresses. People were hodling, sitting on their bags. They started distributing more aggressively here around the top, and as you can see, this is what happened. So let's look at. We're curious about its social data as well. The amount of mentions of balancer over time. Yeah, similar trend here. A few spikes. So actually, if we look at the spikes in social volume, they do actually correlate with this first stop here, and then a second one here as well. Actually, here. There's a spike in social volume correlating with a local top here as well before a small correction, and then finally here. So this is something that we see quite often, I think, is the extreme social volumes or this pronounced chatter towards this or increased interest in a particular coin. Usually what it points to is the irrational confidence among market observers and participants in the price action of the coin or the ability of the coin to rally to its all-time high. And usually this is when you see short-term price corrections as well. So yeah, I wouldn't really, I would definitely, as far as doing some deep on-chain or in fundamental analysis on Balancer, I would wait for at least a month, another month or a few weeks worth of data so that we can really start looking at the trends and figure out exactly how Balancer holders like to participate in their network. But yeah, so you saw, for example, the daily active address trend trending upwards, and you saw the mean dollar invested age kind of dropping right around its top, which is something that we see for coins with a lot more data anyway. Okay, let's look at Link because it's just Link is an enigma for me. I wrote an article. So last week, let me first preface this by saying that last week on our call, somebody asked about Link. I think maybe it was Bagsy because Bagsy was here during last week's call, and we were looking at some of the on-chain metrics for Chainlink, and we concluded by saying Chainlink was looking good. Even though we thought, I think it was right around here when we were looking at Chainlink. Yeah, it was last Friday. And we were saying, even though Chainlink had this massive uptrend up to this point, and it was, in price discovery at the point and still is, we said its fundamentals are looking strong. And, what do you know, just a few days later, Chainlink pumped once again. Now, when it was here, I wrote an article saying that there are some concerning signals materializing for Chainlink. And sure, there was like a small correction or a consolidation, but it doesn't seem to be stopping Chainlink holders or just the market action moving forward. So let's look at a few Chainlink related metrics now and try to figure out, although with a big caveat that this coin and their community can seemingly truck over everything, any sort of bearish indicators whatsoever. Let's look at a few metrics for Chainlink and what we can see. So this is where I wrote my article, saying that I was concerned about this massive spike in exchange inflow in particular, saying that, if you look at previous times that we saw these massive rises in exchange activity, that they did kind of tend to correlate with short-term price corrections for Chainlink. So, I mean, if we zoom in, that still happened, but it was not as pronounced as I thought it would be. I thought, this amount of Link, a couple of million worth of Chainlink being moved to exchanges should have a more pronounced impact on the market. It didn't. It kind of led to a small-term or short-term correction, and then since then, we just kind of started growing once again. So if we look at Link's amount of Link on exchanges at the moment, we can see once again a declining trend, which, once again is pretty good for the coin. Let's zoom out a bit so we can see the trends. Yeah, so, it's the same thing that we saw before Link's run up to its price discovery. The amount of Link has been the declining on exchanges, basically meaning that assuming unchanged demand, if the amount of coins available to trade on exchanges is declining, then it could help artificially or naturally inflate the price of coins that are actually still available to trade, assuming unchanged demand. And this, I think, is what happened as Chainlink in early July started breaking out. Obviously, there were a bunch of other factors as well, but I think this helped. And so, in the past 2 weeks or so, and especially here, since it's a spike in exchange inflow recently, we've seen another sort of declining trend in the amount of Chainlink being moved to exchanges, which is a good thing for a coin. It's something that you want to see. Now let's look at the actual amount of activity on the Chainlink network and see how it has progressed over the last couple of months. Okay, let's zoom out. By the way, am I presenting, Brian? I think I am. Yes. Good.
Yep, all looks good.
Okay.
And DAA, by the way, should be massive right now
It
because it's been
is.
showing some bullish divergences on my.
It is.
Yeah,
Indeed.
that looks great.
Yeah. So yeah, once again, the amount of actual activity on the Chainlink network is close to its all-time high. So here I was concerned because I think when I wrote an article, there was already forming divergence here. And I said, look, if Chainlink can kind of stay around these levels of network activity, great. But if we see it start to retrace as far as its daily active addresses are concerned, if we see it starting to retrace to its pre-pump levels, the price is just not going to be able to sustain itself. However, in the past couple of days, we've seen another boom upward. This is, I think, the second highest day of network activity on the Chainlink blockchain ever, or the Chainlink network. Over 20,000 daily active addresses. And given the fact that you are not really seeing any sort of pronounced rise in its sell pressure, we just looked at its exchange inflow and exchange related metrics. This is another good sign. There's definitely enough fundamental support for Link to pump higher. Now let's look at the actual sort of movement of coins on the network and what their long-term holders are doing. So if we look at mean dollar invested age, so this is something that we've that I also pointed out in my article. So let's zoom out a bit. So mean dollar invested age, once again, when you see these rising slopes, it means that on a network-wide scale, people are hodling. The age, quote unquote, of coins is growing, meaning that they are not moving between addresses. So when they start moving like this, especially as the price starts rallying, it can point to a distribution event or a pivot among network participants to distribution and sometimes even capitulation. So we see these drop-offs in mean dollar invested age coincide with various price stops for Chainlink over the last year. So it happened here in February 2020. It happened once again here in July 2020. And then it did start to drop off and is continuing to drop off over the past week or so. So when I wrote an article, this was the sort of the latest drop off in its mean dollar invested age, but it's continuing to go down even today, meaning that network wide more and more addresses or more coins are being exchanged between addresses, which could prove difficult or could prove a challenging for the price to sustain another sort of leg upward. Now, we can probably see this on our age consumed chart as well. There should be a bunch of spikes, and there they are. So after a period of dormancy here, we saw first here, as Chainlink broke the $13, we saw a big spike in the age consumed, meaning that some long-term holders were looking to dump their bags, and we're seeing a similar spike today, just now. So given the price action, this sort of spike in age consumed and this sort of drop off in mean dollar invested age, what it tells me is that a lot of long-term Chainlink holders are now moving their bags. Now, I'm not still seeing a coinciding spike in exchange-related activity, meaning that on average, it doesn't seem like these coins have made their way to exchanges just yet. But I would keep an eye on this chart, on that chart in particular. So let me plot it over so you can see it once again. Yeah, so moving forward, so here, this is once again, like I said, I wrote my article around here and I said, look, there's this massive spike in exchange inflow, there's this massive spike in age consumed, and a major drop off in mean dollar invested age. It's sort of a perfect storm where you're seeing a lot of long-term Chainlink holders moving their bags and some of them probably moving them to exchanges. Now, over the past couple of days, yeah, there's been a spike in age consumed and a coinciding drop off in mean dollar invested age, but not enough like a sell pressure or not really a growing sort of amount of Chainlink being moved to exchanges, meaning that this could just be private addresses moving their coins between each other, or in certain lending protocols and DeFi space. So once again, this is a relatively good signal for the coin. Now, finally, let's look at Chainlink social data, because I know that it's kind of been blowing up past week or so. And usually when you see these massive spikes in Chainlink's social data and social volume, you will see local corrections. So actually, first let me zoom out so you can see, kind of the trends in the past and how they correlated with price action. Let me try and look at all time. Okay. By the way, sorry for the lag. I think it's because I'm also streaming, so sometimes my bandwidth gets a bit eaten up. Yeah, so there we go. In June of 2019, the biggest spike in Chainlink social volume coincided perfectly with its all-time, well, at the time, all-time high. And then we saw a similar spike in Chainlink social volume here around its February 2020 high, a pretty similar spike around its local top in October, and so another one here in July as, Chainlink broke $8 for the first time. There's been another massive spike. So if we zoom in now to its latest data, so once again, Chainlink social volume is extremely high. So should we consider this to be a leading indicator based on historical precedent? This is probably a pretty concerning signal, because the amount of mentions toward Chainlink or about Chainlink on the crypto social media channels that we track are currently at almost a year high if you discount this single spike here. Almost at a year high, and the actual sentiment toward Chainlink, I think, is also fairly high as well. So let's look really quickly at our sentiment metrics as well to see whether the crowd is still very bullish on Chainlink or whether its sentiment or mood has shifted a bit. Okay. Source Twitter. All right, now what we're going to see, what I just showed was the amount of mentions of Chainlink on social media. And now what we're going to see is the actual mood of the crowd talking about Chainlink. So using our sentiment algorithm, we try to parse all of the incoming messages and label them as either positive or negative without trying to obviously overfit the model. And what you get left with is this sort of looking chart. So 0, as I think Brian already mentioned, so 0 is basically an ambivalent territory towards Chainlink. So it means that on average, people are kind of indecisive about its price action. Anything above 0, and especially these extreme spikes, point to overwhelmingly bullish sentiments towards Chainlink, and anything below 0, like these sort of dips here, point to overwhelmingly bearish sentiment towards Chainlink. So if we look at some of the previous sort of highs or price tops for Chainlink, they do sometimes tend to coincide with these types of bullish sentiment. It happened here at its all-time high at the time in 2019, happened here at its next all-time high in March of 2020, happened here on July of 2020 as well, and then it's occurring once again here. So at the moment, Chainlink related sentiment on crypto social media is extremely bullish, which usually tends to coincide with local price stops and incoming corrections, because it basically means the FOMO guys are kicking in. Lambo and Moon crowd is coming out of the woodwork. They are, saying Chainlink to 100, the flippening, whatever. And usually this is the time that you see big players, veteran investors, Chainlink whales start to dump on the crowd, because there's a lot of easy opportunities to dump their bags. So yeah, this is something that I would keep an eye on moving forward. Even though some of Chainlink's fundamentals are looking strong, like its daily active addresses and the fact that its exchange-related data is pretty timid, like there's nothing happening there at the moment, its social data is pointing to some very concerning signals at the moment. So yeah, there we go. Okay, let's see. Is there anything else that we want to cover before we sign off? It's already been 1 hour and 15 minutes, so we might want to end it here, guys. Somebody's asking, do you guys track Telegram metrics? Yes, we do. Okay, so let's look at Telegram as well. So here you can select, this is available for all Sandbase Pro subscribers. You can select any source that we track, and you can kind of see specific data for that particular source of information. So we track hundreds of Telegram groups that are related to crypto discussions. And here you can first of all see the balance of sentiment between positive and negative messages, and then this is sort of adjusted for the amount of social volume. So very similar picture, actually maybe even clearer than on Telegram. There's each of these tops or highs, price highs for Chainlink on Telegram in the past have coincided with massive bullishness on crypto social media, in this case on crypto Telegram. So at the moment, we are approaching these sort of levels at which previously Chainlink tended to dump, sometimes pretty aggressively, actually. So once again, not a great sign as far as Chainlink social data is concerned. But I've learned my lesson. Even though I was the last time I wrote about Chainlink, so that was probably 7 days ago or about 6 days ago. I thought that its fundamentals were getting kind of rocky, and that we would see a stronger correction than what we saw. Like there was a small dump here, but really, like, it didn't really last for much longer, and Chainlink bulls were able to drive the price up once again. So even though I think its social data is highly concerning at the moment, it remains to be seen. Chainlink has a very active community and a very active speculative community, so anything can happen, really. Don't take this as an investment advice either way. All right, I think we're going to end it there, guys. Anybody that's interested in this sort of data and these sort of discussions, if you don't want to wait until next week, check us out on our Discord and join our join our trading channels in Discord, so that we guys can talk about this every day on our Discord channels. And before we go, I just wanted to say to everybody looking at this on either YouTube or Twitter, check out app.santiment.net after this call. There's a free trial, a 2-week trial for everything pretty much that we've shown you during this call. All sorts of metrics, on-chain social development activity indicators for Bitcoin, Ethereum, all ERC20 coins, anything that's hot at the moment. We probably have it covered from at least 1 or 2 angles that you don't find on other websites. And then after the 2-week trial has expired, we have also recently added a special coupon code. So if you type in TWIC or This Week in Crypto, which is the name of this call, at the checkout page, you will receive a 25% discount for your first billing cycle. Whether that's a monthly plan or a yearly plan is up to you, but there will be a 25% discount on your first billing cycle of everything that you've seen today, as well as a bunch of other stuff that we have on our platform. So I'd like to thank everybody that was presenting today. Brian and Max, thanks a lot for your contribution. And thank you everyone in chat. As always, some great questions. Sorry that we didn't get to maybe look at all of the coins that you suggested in chat, but just DM me on Discord, and I'll be happy to kind of give you sort of some impromptu analysis of what I'm seeing for those coins as well. So until next week, my name is Dino. You were watching This Week in Crypto by Santiment, and I'll talk to you all in 7 days. Thank you, guys.
Great stuff, guys. Thanks, and thank you especially to the first-time listeners here.
Absolutely. All right. Before I go, like, click, subscribe, do whatever you can on our YouTube and Twitter channels, so that we can fool their algorithms into showing this to more people. It really helps a lot. So if you can just click like and comment something like "Santiment is awesome" or something else, whatever you want. It definitely helps us tell YouTube and Twitter that our content is worth sharing with more people. So yeah, help us grow our community so we can grow together. All right. Thank you, guys. Talk to you next week.
Take care.